Are low interest rates impacting on your investment returns? It's time to rethink. Rethink Investing creates wealth for clients through the strategic purchase of positively geared, high cash flow commercial property. Industrial properties, retail assets, or office spaces can be a smart investment option that produces significant and long-term return on investment. Rethink your investment options and look to commercial property. Learn more at rethinkinvesting.com.au. Rethink Investing, Australia's #1 commercial buyers agency.
Welcome to the Smart Property Investment Show with your host, Phil Tarrant.
G'day, hey gang. Thanks for joining us on the podcast today. And there's a lot I do like about this podcast, and I was just moaning before coming online to someone about podcasting and how I don't get enough time to do more of them because I love them so much. But one of the things I get a real kick out of on the Smart Property Investment Show is reconnecting with people who have been guests. And we've got a pretty good run of this now. We've been at this for sort of 4 or 5 years. So it's not our first podcast, but it is the most popular and significant podcast within the Momentum Media network. To give you some sense, you're tuning in right now, and sometimes I've got to pinch myself thinking about these numbers. You know, every single month there's like over 120,000 listens to this podcast. So that's really cool. And I think that's, I get a thumbs up and put some hairs on the back of my neck knowing that there's people tuning in right across Australia and also globally who have an interest in Australian property listening to this. But then I think, oh God, you know, it's a huge responsibility to make sure I get it right. So I'm fortunate that my role here, I'm never bandied myself around as being a property investment expert. I'm just like you. I'm just a guy trying to make a few bucks out of property for a better retirement than what it would have been without having property. And one of the best things about this podcast is having discussions with people who are property investors, who are in the trenches, that are doing the same things I do. Hopefully they're learning a bit. Hopefully I can learn a bit from them, but I get a kick out of it when they come back on the studio after a bit of a hiatus. And that's going to be the discussion today. My guest was on in 2016 in February. So think about that. That's 4 years ago. Gives you some sense for how long this property podcast has been going. And if you go and have a look at the headline on this, go and check it out. It's called Boom or Doom. So whether things going to be going good or going bad. So I've got 4 years of stories from this particular gentleman, Jim Hall, in the studio. And he's going to tell us whether it's boom, doom, gloom, or kaboom.
Well, I think it's a bit of all of those, to be honest.
How you going? 4 years.
I'm doing all right, I think.
You've aged horribly.
Thank
Jim.
You very much.
Horribly. You're in good nick, though. You're looking after yourself. You're not letting the trials and tribulations of property investing turn you down.
I'm withering away with all the stress of managing my portfolio.
You're not sitting on the couch every evening eating a bucket of 4-litre Paul's ice cream, moaning, lamenting the demise of your portfolio.
No, I'm not. No, I'm not.
Okay, so encapsulate 4 years for me as a property investor in one word.
Interesting.
So that's sort of good and bad then?
Good and bad, yeah.
More good than bad? More
good than bad, I think,
yeah. And we'll unpack why it's more good than bad. But
yeah.
Okay. Are you happy to still be a property investor 4 years later?
Yes, I am, 100%.
Why?
Because I haven't lost sight of my long-term goal, which, as you've just mentioned, is to, at some point in time, in maybe 20 years from now, help me have a slightly more enjoyable retirement than I would otherwise have if I hadn't probably invested in property.
Okay. That's probably what most people are thinking listening to this, right? You know, and it doesn't need to be hard, but sometimes it is bloody hard. So has your journey the last 4 years been bloody hard or mostly relatively pain-free?
No, it's been pretty difficult, to be honest. It wasn't what I was expecting. Back in 2016, I had a portfolio which was probably worth about 5 million. And I went through a separation. I wasn't actually married, but been with my partner, a long-time partner, and mother of my 2 children for sort of 10, 12 years. And we agreed that we'd separate. And with that, obviously, had to separate our assets, which was obviously a really interesting experience to go through.
Interesting experience. Most people I know have been through a similar experience would call it something else. So, you know, it wasn't too painful, that experience?
No.
I'm talking about not the emotional stuff. I'm talking the mechanics of it. I don't want to get into the emotional stuff.
No, that's good.
I'm not going to ask about how you feel, don't worry.
That's good. I feel good.
But the mechanics, you know, the actual mechanics of that, was it painful?
Yes, it was. It was reasonably painful, but nowhere near as painful as it could have been. And that's certainly that I've heard many, many other people go through. I'm very fortunate. Separation was reasonably amicable, to be honest, which was good. And thankfully, my ex, she had an accountant that's also my accountant that a lot of you listeners would be familiar with, Munzerul Khan from
the great
Kishab,
Munzerul Khan.
who is an amazing. And basically we came to an agreement just using Munzerul as a mediator that would be sort of fair and reasonable. And how that worked out to be was we sold a little bit of property. My partner didn't have sort of the cash flow that I'm fortunate to have. So in the end, I ended up keeping a relatively decent part of the portfolio. I refinanced, paid a lump sum to her and gave her a property without any debt on it. She couldn't really afford the debt. So I've increased my debt a little bit, but I managed to keep a reasonable chunk of the portfolio. So all in all, both happy. We haven't had to start from scratch. We haven't had huge legal bills, etc. So look, yeah, all in the end, an interesting experience, but it could have been a lot worse. Yeah.
So, and I imagine there's a lot of people tuning into this, Jim, who have gone through this process. They may be going through it or may go through it in the future. When you look at divorce rates or separation rates or whatever you want to call it, it's
pretty common.
It's pretty common,
pretty much 50-50, 50%.
And I'll ask you later on, start thinking about this, whether or not you would have structured things differently if you knew that you were to be separated, right? So have a think about that. But anyway, we'll get into that. It's a tough one, right? But it's about risk minimization. But we're talking about the process. So our challenge here, Jim, on the Smart Property Investment Show is to condense 4 years of property investment journey into about 35 minutes. And if I'm enjoying a conversation, I might extend it a little bit and make it a little bit special because I think you might get some good info out of this. But let's talk about the mechanics around decoupling as individuals, as shared investors, and putting aside any of the other stuff I'm only talking about as property investors. What was your guiding philosophy to how to unstructure that most effectively?
Most effectively?
Yeah. So what did you say? These are the important things that we need to make sure we get right. Putting aside like any of the family emotional stuff, but from an asset value. So you've spent how many years building that portfolio up? So you don't want to unravel all that value you've created by making ill-informed structural decisions. So what was the philosophy to make sure you could maximize the hard work that you've put into that portfolio?
Well, I think through conversation with each other and through our accountant, it was how can we both come out as winners of this? Given that we our lives are going down separate routes, that we no longer want to have that shared life together, that we've got 2 children together, and I've always sort of seen things as even though I've been primarily the sort of the breadwinner, it's our portfolio. I always consider it to be our portfolio, but the reality is we can't just split it down the middle. Michelle wouldn't have been able to pay the finance that was required on it. So again, we just got good advice, as always, from day one. Surround yourself with good people, smarter than you, get good advice. And fortunately, we've got some great advice, and we came up with a solution that was a win-win.
And that's an important point. So the guiding philosophy or your approach to it all was win-win. It wasn't win-lose or lose-lose.
Win-win.
And what I hear, and these you spoke about it beforehand, the horror stories you hear about this is that when portfolios get pulled apart or liquidated or something happens as a result of a fracture in a relationship, most people approach it win-lose because they're not able to detach from maybe the emotional component of it, but still think with clarity around the functional component of it. So a win-win approach is best, but it's hard to do. How much do you think your advisor was part of that process, or did they just enable your base philosophy?
No, I think it's I'm very fortunate in my role here over the years that I know a reasonable amount, probably more than a few people about property and finance. But yeah, absolutely, having that expert advice from someone like my accountant Munzerul, who has obviously dealt with many other people in my situation that have gone through a separation, seen what works, seen what doesn't work, seen people that have gone down the courts route and can't agree, and what that has ended up doing to both of their outcome for both people.
And that's not a financial outcome, that's a mental health outcome, it's
Absolutely.
a personal
everything,
it's a personal health outcome, at all. It's all interconnected.
Yeah, and it was like, well, okay, well, what is the goal? As you say, we've built up this portfolio over the best part of sort of 10 years together. Let's try and make it as beneficial as we can moving forward. And that was really what we did. And look, in all honesty, it's not gone quite the way that I'd hoped. So, that was that part at the time. went for the agreement. It took quite a long time. There's a lot of refinancing that had to happen. It was quite a lengthy process. It probably took about a year going from, right, this is what we're going to do, to actually making it happen with everything that needed to be done, with not just the finance, but organising sort of, this is what we're agreeing with. And, as the future changes, things can't change. This is, this agreement is sort of final. So that was quite a lengthy and bit of a painful process, I guess. We got there in the end. What happened, I guess, with that was I refinanced, so I took on more debt. While that happened, obviously, we've had the last couple of years where property prices have sort of trended down somewhat, a little bit as well. So while
It's a matter of timing.
Yeah, so I took on more debt, had equity, and my equity position has gone. But again,
So you've taken on the debt at the point in time when those properties were at a valuation in a cycle, which is probably on the high side rather than the low side.
That's right, yeah.
But these things you can't control. So when you think back, and we'll get into what you actually did about it at the moment, but if you think back from that process of making a decision to go your own way, if you think about when it was the worst period in terms of your relationship with your property portfolio, when was that? Was it at that point in time, or was it a time after that when it was in limbo, when you didn't know what was going on, when you were like, this is the worst it's been, or has it been pretty stable? How do you feel about that?
No, it's been pretty stable. I mean, I'll move on to what's happened sort of more recently. But no, it's always been pretty stable. I've built I've always sort of looked at a good combination of cash flow, capital growth. I've done very well out of some properties in my portfolio, which have doubled in price. I've not done so well out of other properties, but in terms of, capital gains. But, those have still been relatively decent for me in terms of cash flows. So overall, I've always had a pretty decent and balanced sort of portfolio. I guess obviously sort of taking on more debt, one of the things that, in hindsight is a mistake that I did make. And that was probably because I'd taken a year or so to get all this sorted. And then it was kind of like, right, I need to just reset and think about things. I basically fixed my loans, which obviously in hindsight's a great thing. Not the first time I've done this, by the way, but so I sort of fixed my loans. Not that they're, historically high, but they're certainly higher than what they could be at the moment. So that's probably a lesson to be learned.
But these are decisions that you make at a point in time when you need to make those decisions. Hindsight's a great thing, but you're best to act in this scenario, in the circumstances that you're aware of right now or at any given time. Now, Jim, let's get into what you did, but we'll go to a break beforehand. Back in a moment.
Whether you're an avid property investor or about to buy your first property, why do it alone when you could partner with Australia's best buyer's agent? Director of Pure Property Investment, Property Investment Professionals of Australia board member and REB Buyer's Agent of the Year, Paul Glossop, can take your portfolio to the next level. Get in touch today to discuss your investment goals. Get one-on-one insight from Paul Glossop. And for the first 100 people, this service is completely free. Head to purepropertyinvestment.com today to schedule your consult with Paul Glossop directly.
Welcome back, everyone. Phil Tarrant, host of the Smart Property Investment Show with property investor Jim Hall. We haven't seen Jim on the podcast, or I haven't heard Jim on the podcast for 4 years, and it sounds like it's been quite a bit of a ride. Before the break, we were chatting about this fundamental fracture of, how you're approaching property investment because of a relationship decision that you made. And so you've had to refinance a whole portfolio, and you said that you gave one property completely unencumbered with any debt to your ex-partner. You sold how many properties?
Then we sold another property.
And that helped being able to pay down some of that. Yeah. And then you refinance the other ones all into your name.
Yeah.
And therefore you took on more debt. So can you give me some sense of the portfolio today? How many properties are in it?
So at the moment I've got 9 properties in my portfolio.
So it's not a small portfolio.
No, it's not.
Okay, 9 properties. So that's more than 6, and there's only
plus another
20
in my SMSF.
Yeah, so there's only 25, 26,000 Australians that have more than 6 properties. So it's a big portfolio comparatively. So you got 9 properties, and then you got 1 inside super. Yeah,
that's right.
Okay, so that's 10. Total valuation, circa.
I haven't. Well, I'm just going to get. I'm getting them revalued at the moment, as it happens.
What do you reckon thereabouts?
About 3.2 million.
3.2.
So they range from anything from sort of 650, 700 is the biggest in terms of value, down to sort of 250. Well, maybe probably 300 mark.
Okay, and what's the debt?
Debt is about 2.5 million.
2.5. A bit of equity in there.
Yeah, a little bit. Obviously, I've had to refinance quite a bit to pay out the other.
So 700K on 3.2. So your LVR's what top line numbers? It's sort of in 70 odd something. 70
and as I said, I'm just getting revalued at the moment. So I expect they've come down a little bit. Some of them,
but the valuation's only really important if you're looking to refinance, right?
Exactly.
So,
yeah.
And to your point earlier, you've refinanced these properties after a considerable period of growth, and a lot of them, by memory, is in the city market. You tell me what. Just the locations that you've got, because I know a lot of our listeners always go, "Where are the properties?"
Yeah, I've got 4 in Sydney. I've got 2 out sort of west around sort of Blacktown, Mount Druitt area, and then another 2 out around Campbelltown area.
Okay.
And the rest are up in Brisbane.
Whereabouts in Brisbane?
A mixture of Ipswich area,
yep,
sort of Logan, that sort of area.
Okay. And then which property's in your super?
Another one in Logan in Queensland.
Cool. 3.2-ish val, 2.5 debt. So you got to hold these properties now. Are you?
Yeah, that doesn't include the one in the super, by the way. I'll keep that separate.
Okay, we'll keep it separate. So we'll just talk about the stuff outside of super for the sake of ease. So what's the strategy from here on in?
Well, interestingly, my strategy has changed over the last week or so.
Oh.
One of my houses needs to be pulled down. So
does it now?
It does, yeah, which is interesting again. I hadn't done anything, obviously. As I said, I'd sort of resettled everything, got myself in a situation, just left it, focused on other things that I needed to sort out, just sort of going along with things. And yeah, I had a property, one of my Sydney properties, it's a big size house, 5-bedroom house, which has got quite serious termite damage.
Is that one of the Campbelltown ones?
It's one of the Campbelltown ones.
A lot of termites in Campbelltown.
There's a lot of termites.
Don't talk badly about Campbelltown.
No, I won't. I won't. And so literally I was driving home literally a couple of nights ago and got called by my property agent. So the house has been vacant for a while. So what happened is we had some heavy rain back in February time, if people in Sydney remember. The roof didn't cave in, far from it, but water came in the house, and in the end it needed some work, and I moved the tenants out straight away to do the work. And as I got sort of builders in, and as time sort of went by, I realised that the work was quite significant. So I had to leave it for a while so I could build up a bit of money to sort of pay for the works. And
do they quote it or they start working on it?
No, they just quote. I just sort of repatched a few things up, and then knowing that it was a reasonable job. But I've just had someone look over there, and essentially the termites have done so much damage that it really needs to be pulled down. So my first...
Do you get insurance on termite damage?
No, you won't. No. We bought it with termites. So we knew that there had been termite damage there. And we bought it for $240,000. We spent about $40,000 doing it up.
Is there a pool in the backyard?
There was a pool in the backyard.
And you filled it in.
That's right, exactly.
And then the council knocked on the door and said,
something
why'd you fill the...
Something like that.
We spoke... See, look at this. I remember 4 years ago having this conversation.
Yeah, well, there's rules and regulations around... just filling them in properly and getting rid of them. You can't just fill it in with a load of dirt and cover it up. You have to do it properly.
I think we spoke about that, if I remember.
Yeah, so that was all done, and it was, a decent place. And it went up in value, and, it afforded me to refinance and leverage and buy some more properties. But yeah, essentially it needs putting down now. So my initial action was, as you can imagine, oh dear. And then I sort of slept on it, and I thought, well, you know what, like everything, everything's got to have a silver lining on it. So as the last sort of couple of days have passed, I've had to think about what I'm going to do. I'm just sort of looking into my finances at the moment. And I think, luckily enough, it's, again, I bought well using some property buyers, the good guys at Right Property Group.
Oh, yeah. Stephen Victor.
Yeah, so they sort of got we didn't go into it not knowing about the termites, but it was a good block of land in a good area. And I think what we're going to do is look at building a duplex on it now. So I see a lot of opportunity in the situation.
Was that their suggestion or was that someone else's suggestion?
No, I sort of came around talking to a mutual friend of ours, Alex Whitlock. Yeah. And since then, I have had a chat to the guys at Right, just to sort of sound up sort of what I'm thinking. My initial reaction was like, right, okay, well, I've got a $500,000 loan on this, but I've got no house, or a house that's worth nothing. Oh, dear.
Like, is it a health hazard? Could you, you could do a bodge job on it and rent it out, or?
No.
You're not comfortable to do it?
No, I'm not comfortable doing that. And again, I'm very much of the opinion that, look, at the end of the day, if the house was unsafe, I'm glad that there's no one living in there, and I'm glad that I found out rather than have someone just patch it up And in a few years' time, something potentially happen, insurance or no insurance, I don't want that on my conscience. So,
and that's the responsibility of the landlord, right? You can't think that you don't have to be accountable for providing a safe residence.
Absolutely, So I thought, worst case scenario, look, I can sell the land as is, probably pay off the loan, and hey ho, look, not the end of the world, is it? So since going from that overnight to thinking, actually, there's probably an opportunity here, having some conversations again with people of experience. I'm very lucky in my job that I know a lot of good accountants and property advisors and finance people. And yeah, I think there's probably quite a good opportunity to just running some numbers, looking at the moment, is a potential to potentially build a duplex for around about sort of maybe $500,000, which we could.
Is that much it costs to build a duplex?
Yeah, using what's
that
called four bedrooms using Hebel block, which is about 2/3 the price of standard brick, probably costing in the region of about sort of $450 to $500 is what I've been told. I need to look into this, obviously, but this is just the numbers I've been just having quick conversations with. And then hopefully with a couple of places that valued at $650 to $700 once constructed. So each, yeah.
So like 1.3 million ish.
Yeah, so all on top, looking at the 500,000 I've already got, another 500,000 for the build, probably a little bit more, and then potentially end up with something valued at 1.3 to 1.4 million is the likely outcome looking at this stage. Now, obviously, the tricky thing on top of that is getting all the finance sorted at the moment. Yeah. So it's a bit of a way to go, but as I said, silver lining, I can see an opportunity. And look, again, I'm very fortunate with the contacts that I have in finance and stuff. And so hopefully we can make something work. And for me, I haven't done anything in my property for sort of 3 or 4 years. Kind of sort of been thinking I should probably get around to doing something, but obviously in the market at the moment, there's probably not that much opportunity. And in a couple of quick days, I'm almost kind of reinvigorated around property investing
and
again.
look at you, straight onto the Smart Property Investment Show. Who would have thought?
I'd even stopped listening to you, Phil, I have to honestly say.
This is why you lost your way in property.
I think you're probably right.
I find that's a common thing.
So now I'm tuning in twice a week without fail.
People that lose their way in property lose connection with the Smart Property Investment Show, Jim. This is the way it is. And on that note, we're going to go to a break. Back in a moment.
Are low interest rates impacting on your investment returns? It's time to rethink. Rethink Investing creates wealth for clients through the strategic purchase of positively geared, high cash flow commercial property. Industrial properties, retail assets, or office spaces can be a smart investment option that produces significant and long-term return on investment. Rethink your investment options and look to commercial property. Learn more at rethinkinvesting.com.au. Rethink Investing, Australia's #1 commercial buyers agency.
Welcome back, everyone. Phil Tarrant, host of the Smart Property Investment Show with property investor Jim Hall, who lost his way, but he's refound it. He's reconnected. But why is that? Let's have a chat about that. Is that because you're interested in it, or it's a nice project, or is it, hey, hang on, I can make a few bucks out of this and get back into the process of controlling the profile of and therefore direction of your property portfolio?
I think it's a bit of all of that, to be honest. I mean, I remember when I started from scratch, sort of the usual thing. We bought the family home. Then, after a few years, I thought, what should we do? And again, got some advice, and, we leveraged that to buy the first in property investment. And like a lot of people listening to this show, they just got the bug. I loved it. Once I got my head around the numbers and how it worked, and look, there's a certain amount of luck, I guess, in terms of, being in a rising property market, which obviously helped in Sydney. But I just loved it. I was just really interested in it. I wanted to build. I had a plan. I had goals, which, then shifted again as you bought, a few more properties. And, as a lot of investors know, your goals change over time. And then, obviously, life happens as well while everything's going on, and made the decision to go a different way and sort of separated and resetted the portfolio. And then I didn't just lose interest, but, I had a lot of other things on my plate, and so it just sort of took a bit of a back step. I'm not very good administratively, unfortunately. But yeah, it's almost given me that, from being a bit of a pain in the backside, I'm quite excited about it, to be honest. Yeah, I'm quite excited about it. Again, because I work in finance, I'm not scared by debt. Good debt, I'm okay with that. I'm comfortable taking on debt. And I believe, anything you do comes with a certain level of risk, of course, there's measured risk.
Well, let's have a chat about risk. How risky is this? And so Have you made the conclusion that you're going to do this, or is it still I'm thinking about it?
No, I haven't made the conclusion.
So how are you going to make the decision whether it's the right thing to do?
So I have already got the wheels in motion to, first of all, look at the finance side of things. So number one, based on some assumptions.
So can you get the money?
Can I get the money?
Well, how can you get the money?
Because it's all, if I can't get the money, and it's not worth even
for you, is that,
about.
Can I? And this is an important thing around mindset for everyone that's listening. Is it, can you get the money versus how you can get the money? Which one is it?
Yeah, well, I will get the money.
Yeah. So it's not if, it's how.
How. It's how to do it.
This is so important.
Yeah.
And this is the difference between the best property investors I know and also the best mortgage brokers I know. It'll be like you go to a mortgage broker sometimes and go, this is what I want to do. And they go, nah, machine says no, computer says no. And you go, well, there's got to be a way in which you can make the computer says yes. And that could be go to a different lender with different serviceability requirements, et cetera, et cetera. So, but it's not the broker in isolation, it's also the investor. So a lot of investors go, I might do it. If I can do it, I'll do it, rather than I'm going to do it and I will find a way how to do it.
Yeah, I think I will find a way to do it. I know enough to just do some rough numbers. And look, again, I'll look into it and I'll get people that know a lot more than I do, finance specialists, property experts, et cetera, accountants, to see, is this a viable option? I think it is, just having a look at it. And the few conversations I've had would seem to indicate that. So yeah, that's it. Start off, can I make it happen with the finance? Yes, I think I can. So once I do that, I'll get some proper quotes on how much it's going to cost and work backwards from there and do what I normally do and just go for it.
Sort it out.
Just go for it.
It's a mindset thing. You've got to actually say, I'm going to do this, because otherwise you lose control.
Yeah, I just kind of, once I've made my mind up, do it, get it done.
So what's going to happen with the rest of the portfolio while this is going on? How is that? Is it everything tenanted?
Touch wood, it's been good. I've been very fortunate throughout COVID that apart from this particular property, all of my tenants are paying their rent, no problems. Just some of the properties, there's a little bits of work that have needed done, which is pretty standard, particularly with the sort of the portfolio that I've got. But touch wood, other than this property, nothing major. So hopefully that will continue.
Okay, so you're just going to say, so essentially put all your eggs into this basket for the moment and leave the rest of the portfolio alone for the moment?
I'm not sure, to be honest, Phil. This will be sort of, I think,
it's probably, to actually have quite a significant full-time job and also build in duplex simultaneously, you're going to be busy.
Yeah, exactly. Yeah. So
you can't fight on too many fronts.
No, I won't. And again, I'm very mindful of my time, and I am quite time poor, rather. So again, I will make sure that I've got people that will help me get this project done, because, as you say, I'm not going to be out there checking if it's going okay.
Are you happy to share this journey on the Smart Property Investment Show?
Absolutely, of course. Yeah.
Let's do that. Right in. Let us know what you think, and I'm sure I know Jim quite well, so I'll ask him anything I feel like it. So editor at smartpropertyinvestment.com.au, get in touch, and if you're thinking about doing similar, like all those questions you ever wanted to ask, let's make sure we can extract that information. You need a good builder. You need all that. There's a whole bunch of stuff you got to do.
Lots of things like that. Yeah.
Have you spoken to your accountant yet?
I haven't spoken to him. No, I haven't. Literally.
Well, I know he tunes into the Smart Property Investment Show. He's got to be annoyed that he hears it this way.
Well, he does know. He does know about it. He received it on an email this afternoon, actually. Okay. So I hope he's across it. I'm sure he is.
But knowing Mundra, he's going to go, Jim, yes, great idea.
Yeah.
This is how we do it effectively.
Exactly.
And that's what you need, back to my side. You need an accountant who is experienced, who goes, yes, I've done this. I've seen it happen 100 times. I know what works and what doesn't work. Here's how you can make sure that you got the best propensity for success.
Yeah, it's one of those, I'm sure there's a lot of property investors who have gone through that journey of, particularly those that have started particularly in the Sydney market in the last sort of 10 years of
Gravy Street.
See some great success, and you go, oh God, this is great. Isn't property investing great? I'll buy a place and it goes up in value, and I'll buy another place, et cetera, and I've got all these properties. Great. And then things change and people think, oh no, and I've always gone, well, look, it is what it is. I've done
but if you build a good portfolio through that, it means when things do change, you're sort of okay.
Yeah, and this is one of the things I remember as a beginning, it's what you buy on the way in, it's the price that you pay when you buy that property originally, buying good property, in good areas, and this is obviously, despite being a bit of a nightmare, it's
the reason why most Australian property investors, 8% of all Australians make some sort of claim on a tax return about being a property investor. Most property investors, as in most, only have between 1 and 2 properties, because most buy the wrong property on the way in. The first property is either wrong or the second property is either wrong. It doesn't allow them to leverage into number 3, 4, 5, 10, 50, 100, however many you want, right? Like it's irrelevant. So what's the gearing situation on your portfolio? Is it positively geared as is?
It's relatively neutral.
Okay, before tax.
Yes, correct.
Okay.
Yeah.
Cost you a few bucks.
A little bit, yeah.
But nothing where you really notice it.
No.
The cash flow serviceability every month.
No. The last couple of years, once tax has come back, it's probably been positive.
Yeah. It's good. Yeah,
so it's not too bad, you know. So, you know, and apart from, you know, the odd boiler going or kitchen sink getting clogged up or, you know, that sort of thing, there's nothing, touch wood, that's been sort of, you know, too bad or too costly for me.
So you get the privilege of choosing your own headline for this episode. What is it?
Well,
and this is your chance to summarise.
Can I just say one other thing to everyone who's listening? And this, I mentioned this to someone this morning. For lots of people that have got properties out there, I don't know if you're like me, sometimes, you know, not great administratively. I would really advise anyone, you know, make sure you get that pest updated. There's plenty of termites, you know, and I reckon, obviously, with the summer coming, already I've spoken to someone.
So make sure you get your barrier in place, protected from termites. It costs you a few bucks.
Yeah.
Now, what's a termite treatment worth between like $500 and $700?
Yeah, it depends how you have it done.
You
but
know,
yeah,
some pretty sophisticated, particularly if you're in termite prone areas.
Definitely, yeah, exactly.
Like
that.
Queensland or out west.
Particularly, and with the summer
Sydney.
coming again. So, yeah, I mean, I'm sure, hopefully, I'm sure most of you, of course, do. And are probably going, you know, why did you buy a termite infected place in the first place? But
you get some bargains if you buy termite
exactly.
until you need to knock it down.
Exactly.
But now it has a silver lining to your point.
That's right, yeah,
Yes,
you know, and it's probably, you know, hopefully, if all goes well, it'll end up being worth a lot more than what it would have been if I hadn't done anything.
There you go. Now, the question I asked you to think about was, would have you structured or things differently or done things differently if you knew that you were going to have to pull your portfolio apart at the point in time?
No, I wouldn't. No.
So that means you bought the properties in a way in which, and a sequence in which, gave it resilience despite changes to your personal life.
Yeah.
That's a good position to be in.
Yeah. It was complicated. I mean, most of the properties were in my name. There were a couple that were in...
So you didn't have to sell any back to yourself or anything?
No. It was reasonably straightforward. We had to change ownership of a couple of properties.
You pay stamp duty on that, or you're able to get around that?
No, we were able to get around that.
So a good accountant saw that.
Good accountant, yeah. We didn't pay any... Yeah, it was quite lengthy, but it was reasonably straightforward. The refinancing was pretty hard, to be honest, because it was a couple of years ago when refinancing or finance was hard.
Oh, smack bang with those APRA requirements when serviceability, like it's softened a little bit. That's when they were trying to put the brakes on property investors.
Yeah, so that was probably the hardest thing, was getting that over the line. I had it wasn't a solicitor as such, but I had what we were doing was we were working out, it was like a mutual agreement, but it was a binding agreement, which was a legal document about this is yours, this is mine, this is what we're doing, and it's all laid out. And, you know, after that's signed, it's, you know, and that was quite a challenging process going through that, not between the two of us, but just in terms of the legal side of getting that all done, documented. And yeah, that was a pretty lengthy process, to be honest.
So what's your headline?
I don't know. Well, I was sort of saying it was House on Hell Hill a couple of days ago.
There we go. House on Hell Hill.
But I think I would probably change it to Silver Lining.
Really?
Yeah, why not?
Some of the best gifts come badly wrapped, Jim.
Absolutely, yeah.
To channel our inner Tom Panos.
Genuinely, absolutely. I love Tom, great guy, if you're listening. But yeah, you know, I'm generally in literally a 48-hour period, I've gone from not being really low, but, you know, going from, oh God, you know, this is a nightmare, quite frankly. What's this going to mean? The portfolio's not, you know, to go, you know what, this is a great opportunity. And yeah, I kind of feel a bit invigorated by it, to be honest, in terms of
it sounds like you've got a strategy.
As I said, I haven't done anything, you know, since I sort of, you know, separated the portfolio. I've just kind of left it and almost, to be honest, forgotten about it.
But that's okay. And this goes back to building a portfolio which is resilient to time or change. And that you didn't do anything with it for a couple of years probably helped it.
Yeah.
You know, like it wasn't a inverted commas shit portfolio beforehand. So therefore, because you fell out of love with your property portfolio, it didn't necessarily do you wrong as a result of it.
No.
It's just because it was built well.
Yeah.
And this goes back to building portfolio when you want to re-engage and reconnect with it, which has been forced. But here's an opportunity for you to actually do that. And now you're probably a step change into being more proactive about this next generation of wealth creation for you. You know, it might be a couple of years when you actually go, or I'm going to give this another red hot go and fall in love with your property portfolio again, and then you might fall out of it.
100%, you know, and for me, you know, I guess it's just that opportunity to learn again, you know, to learn, you know, go for a new experience, you know, building a place, knocking down a place, building a place, you know, So, I'm genuinely quite excited about it.
Good. Nice. Well, let's not make it 4 years again. Seeing that you're going to, warts and all, the Jim Hall series.
That's it. And I remember 4 years ago, I was probably raving about the importance of getting a good mortgage and finance broker. Yeah. And the same rings true right now as well.
Absolutely. So, you know, you love mortgage brokers.
I do love mortgage brokers.
As do I. They're good.
Oh, very good.
I wouldn't be a property investor if I didn't have one. But all right. Well, watch your space. Editor at smartpropertyinvestment.com.au. Let us know what you reckon. I'll do a Q&A with Jim and as he goes down the pathway of fleshing this out, maybe some of the partners you use to help out put this together, the builder, I'm sure Munzer will come and have a chat and we can talk specifically around this is a case study saying here is the house, here's the block, here's the valuation as the land, here's the build costs, here's why we're building this particular property, this is what it's going to mean, this is where it fits in the strategy of the portfolio. Are you going to rent it out or are you going to sell one? Who knows? You know, let's get stuck into that. I think our listeners would really appreciate it to get that real inside view.
Yeah, I'd be happy to do that. No problem.
All right. Any closing remarks, James?
No, it's been a pleasure talking to you again, actually, in this format. I can't believe it's actually been 4 years, but I think it probably has been 4 years.
It has been 4 years.
Yeah, and... there's not.
Am I a better podcaster 4 years later?
No. You've gone downhill, I think. You've lost back in 2016. You've lost that energy.
I've lost the charm and charisma.
You're battle weary.
Battle weary now.
No, it's good. Very good.
Yeah,
it is. And you know what? I might start listening to you again.
You should do. This is the reason why you fell out of love with property.
Quite possibly.
This is it.
I have been thinking about that.
I'm like the who's that love song dedications guy? You know who I mean? At night time where you call up and go,
I don't know. I think maybe we listen to different radio stations.
No, everyone's listening to those. It's that you dial in and I can play the song you want. That's what I'll do in the podcast maybe before. If you're falling out of property, call Phil Tarrant, 1-800-PROPERTY. maybe
next time I'm on then we'll start with a tune, shall we?
We can. You can choose your own walk-on music.
I'll do that.
Anyway, James, thanks for coming on. Look, and I know it's quite personal, so thanks for sharing.
No problem.
The journey that you've had. And for those of you tuning in, come on and have a chat with us. I think I'm sophisticated enough to be able to navigate a conversation like that in a way in which doesn't touch on some of the personal issues. But I think it's important as a community for us to keep sharing these things. So for those that come on and share your journey through property, there is a lot of people getting a lot of value out of it. So if you want to be part of that process, make sure you get in touch. And it doesn't matter where you are. You don't have to come to the studio like Jim has. We'll chat to anyone in Australia or globally over the marvels that is the interweb. So get in touch with the team, editor at smartpropertyinvestment.com.au. There's only one favour, and I don't ask for favours very often. Can you please keep those reviews coming wherever you're listening to this, whether it's the Apple iTunes player. It's pretty easy. Just press the 5 stars if that's what you think we should be getting. But importantly, the comment field, let us know what you reckon. Let us know what you'd like us to do better, or any feedback you've got. I'm a big boy. If you've got some criticism, I'm happy to take it because I'm always looking to try and improve it. But importantly, the feedback's not for me. It's for the great team behind the Smart Property Investment Show who do all the heavy lifting around. It's just not me behind the microphone. So if you can do that for me, that'd be real handy. Jim, you're going to do it for me right away, please?
Yeah, I'll give you another review. Yeah.
All right, good. Nice one.
I'll up you from 4 stars to 5 stars.
4.5, mate. Come on. That's all I worth. Thanks for joining us today. We'll be back again next time. Until then, bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property, or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.
Whether you're an avid property investor or about to buy your first property, why do it alone when you could partner with Australia's best buyer's agent? Director of Pure Property Investment, Property Investment Professionals of Australia board member and REB Buyer's Agent of the Year, Paul Glossop, can take your portfolio to the next level. Get in touch today to discuss your investment goals. Get one-on-one insight from Paul Glossop. And for the first 100 people, this service is completely free. Head to purepropertyinvestment.com today to schedule your consult with Paul Glossop directly.